Hello, everybody. This market remains brutal to end of day traders with its insane overnight gapping up and down. This time, though, a big gap in the morning, completely reversed, with stocks ending lower on heavier volume than the session before. It was about average on the NASDAQ, and it was about slightly above average on the New York Stock Exchange. But the key thing is it's a distribution day, and that is coming right after yesterday's quote follow through day, which first off, 3 out of 4 fail. However, no market uptrend has ever started without one. So that being said, whenever there's a distribution day that follows a follow through day, those have a failure rate of 99%. I think one time a rally attempt actually turned into a significant 20% uptrend before that eventually rolled over. So it's right around 90, 98, 99% throughout all of history. So the chances of this market retesting the 824 lows are now significantly higher now, especially based on the way individual stocks looks. I mean, stocks like Facebook look like they're failing right at resistance. Apple's failing right at resistance. Let's even go look at Microsoft. Google, everything just doesn't look healthy, even if it isn't rolling over yet. It does, like CMG, Priceline. Everything looks pretty weak across the board. But unfortunately, with all that weakness, these gaps are just brutal. Unfortunately, PSQ decided to go ahead and gap below my final sell stop, so I was knocked out of the entire position, basically around the morning lows, before it then completely went in my favor again. SDS, similar situation. I was completely knocked out of the entire position in the morning. By the end of the day, it's up 2.60%. And also SRTY, our biggest former hedge, now our biggest short position, unfortunately gap down, knocking me out of half of my hedge. With the reversal, it is up to you. You can, let's say that happened to you today. You can either put the trade back on using today's low of day as a final sell stop, or you can wait for the next signal. My system with these inverse ETFs require signals. It does not necessarily obey the reversal rule like it does on leading stocks, because downside is limited compared to the upside on a long position. But that being said, I did get one actionable signal, and that came with VIIX. And once again, you'll remember TVIX. So our TVIX signal is back here. Since that signal, it's still up 114% in about 3 weeks. Unfortunately, it decided to completely gap up in the morning, and it was the one incident. Well, DXD also, I did the same thing on DXD, where I did not split my limit orders into half market, half limit, so I'm out of it. But the good news is that this market is going to go ahead and just completely fall apart. I actually do have a legitimate signal in VIIX. It's not as fueled as TVIX. It's only like double the move of the VIX. TVIX is like a triple leverage unit. This is a double leveraged unit. So VIIX is giving a pocket pivot point signal. BOP has increased significantly from the session before after already having max green BOP. Price is basically bouncing at the 20 or at the 200-day moving average, and our final sell stop and only sell stop is today's low of day, so we clearly know where we need to get out if we're wrong in the position. But that's going to be at 2.5% of my account capital, no more, no less. It's a volatile instrument, and this is a crazy market, which is why ultimately the best trade right now is cash. We're 85% cash. I know people 90% cash. Some of the greatest traders out there who have been written about in books are 100% cash. Those particular traders that do not short the market. There are some that do not. Those that short the market, though, I'm sure they have some hedges working out there like we do. But the bottom line is that things do not look good. We are extremely heavy cash, and as long as this tape stays volatile, sloppy, messy, choppy, with an overall downtrend bias, it's going to probably stay that way. Now, let's say we chop around for 5 more days. That will get price, 50, and the 200-day moving average all lined up on the NASDAQ. That would allow a juicy short where I would increase size significantly if that would set up. Same with the Russell 2000. If price rallies back to the Russell 2000's 50-200-day moving average on low volume and gives a major reversal signal, like today's is a pretty big reversal signal, but it's far enough away from the averages that I could see us testing the lows and then bouncing off the lows even. But if we do break to new lows, break through those August lows leading into October, it could be a pretty ugly end of September and early October. But if that then would happen, I would be then looking for a low at some point in October, unless this is the start of a big bear market, which then you can just every low is going to be tradable. But we have our system, so it's, to me, it's pointless. That's why today, getting stopped out of all my shorts, I wasn't that upset. I expect that in a market like this. And plus, once again, we're mainly in cash. These aren't large positions. If this would have been a huge position, I would have gotten stopped out in the morning and then had these reversals. It would be much more problematic. But as it is what it is. And on that note of nothing continuing to work, our gold leveraged hedge failed completely today. So it's closing below the August lows on heavier volume. So that's a 100% sell. I was taken out in the morning, and it worked in my favor as it's closing even lower. So UGLD was a full sell. And intraday, there's still plenty of stocks still, in vogue. VVUS was an intraday play, billionaire play. It moved from an opening price of 127, got all the way up to 166. Also, in our list this morning that we put out for everyone, we said to watch VTAE. This one opened up at 1121 and ran all the way up to 1588, and it finished up on the day 89%. That's an 89% gain in a down market that's choppy and ugly and volatile. So once again, the intraday action is still there. And then another sign of how dangerous buy and hope is, we know some traders also that were buying this biotech stock based on its daily and weekly pattern. In a bad market, though, that's not normally a good idea. That's why you want to see something break out and then have tight stops. This thing dropped 78% alone today, so quite an amazing sell-off. But the importance of VTAE, the lesson learned here is that we also were watching AKBA for a similar move, and you can see in the morning it didn't quite have that move in reverse. On the other hand, VTAE did. That's why you got to watch both of them. We didn't know which one would run. This is the one that ran. Now, also, just another sign that this market's not healthy. GoPro still breaking down to brand new 52-week lows on heavier volume. Men's Warehouse did a bounce breakout yesterday, and today completely reversed and broke down on huge volume. So once again, something you normally don't see in healthy markets. And then if you want to see what an all-out liquidation of a bad stock is, look at GBSN. Look at the volume. The past month of this thing trades under $1 and is now at 11 cents. Once again, you normally don't see this kind of action in a strong market, so it's pretty bad out there. And now the one shocking thing is that I actually do have a speculative long signal that I'm going to take because the pattern's too bullish to pass up on. And it's going to be such a little count value, and I know this stock and I know the growth in the earnings and sales in the most recent quarter, that it's not a TTPH kind of situation here. Plus, as you notice, TTPH wasn't already breaking out. But EDAP is breaking out to a new high, stronger volume, as you can see right here. Big volume surge, not a pocket pivot point signal. But on a longer term pattern, you can see from the October lows, it's moved up from $1.38 to $3.78. It's held up extremely well in the mix of this market sell-off. So this breakout to a new high is a pretty big deal. So it's going to be a 1% of the account position. The first sell stop is below today's low of day, 365. The final sell stop is below the 94 low of day, 350. So we don't risk much on the trade to know we're entirely wrong. It's going to be about a 7.5% loss on a speculative long position. But once again, if this market's going to chop around and chop higher, EDAP will definitely run. I mean, think about all the other small cap, low price stocks that we've been following that have worked, which actually probably means that this one isn't going to work. But bottom line is you shouldn't be surprised. That's why we're 85% cash. The more cash you have, the better right now. It's the month of September. It is what it is. But overall, this market doesn't look healthy.